Good afternoon, everyone, and welcome to this afternoon's presentation, Cost Accounting Standards for Governmental Contracts, presented by Robert Jones with Left Brain Professionals. My name is Liz Brigson. I'll be your host for today, and we'll go through a few administrative items so that we are all on the same page as we get started. So first of all, I'd like to direct your attention to the GoToWebinar control panel. Hopefully you've had a chance to join us past few months as Robert has been kicking off this series on accounting for governmental contracts. Let us know where you're joining from in that questions box, and if you've had a chance to join us in prior months, and I'll take a look out there as your responses come in. Fantastic, wonderful, and hopefully some of you might be new as well, and we're excited to share some information at the very end about how you can catch up on those prior sessions. Today's webinar is going to be an hour and a half. Now, you may have registered when the webinar was an hour. Robert and I had a conversation a week ago or so, and we realized that we were kind of pushing up to that end of the hour, and we really wanted to not be rushed and be able to take the appropriate amount of time to share these concepts with you. So today's webinar is an hour and a half. There will be 7 polling questions. You'll want to respond to 5 of those 7 polls in order to earn your 1.5 CPE credits for the event today. Also, we just really appreciate your engagement, so please go ahead and just respond to those polls when they pop up on your screen. If you have any questions about the webinar today, you can always email us at support@incorsa.com. And then lastly, I want to make sure I mention the handouts for the presentation today are also available for you to download from the GoToWebinar control panel. So with that, we'll go ahead on to that next slide, and it's my pleasure to welcome back Robert Jones. Robert is a governmental contracts and accounting expert. He has a really fantastic background as a controller, a defense contracts manager, and he's really invested in being an instructor and a speaker and an educator, as well as a really sought out consultant on these topics. So it's great to have you with us, Robert. Thanks so much, and I'll turn things over to you.
Yeah, well, thank you. Again, appreciate the opportunity to be here today sharing additional information. As Liz said, this is 90 minutes. We're here to talk about the Cost Accounting Standards, or CAS, and even with 90 minutes today, Liz, we might be pushing up to the edge on this. There's a lot of information to cover here. Just to set the stage a little bit for those of you, I take the approach here that this is more of an overview, awareness type of approach to the Cost Accounting Standards. We will certainly talk a little bit about each of the 19 standards, but this is not an in-depth series on each of the individual standards. In fact, there are some other companies out there who provide more in-depth training, something we might consider, where you can easily spend 90 minutes on each individual standard. So again, just today, know that this is going to be a high-level overview of all of the cost accounting standards, when they apply, and what some of the exemptions are. With that, just quickly who we are, Left Brain Professionals. We are a boutique accounting firm, and I say that because we have a very specialized offering focused only on government contractors. We practice primarily accounting system design, implementation, and audit support. So the topic here today of cost accounting standards really lines up with what we do on a daily basis with all of our clients. Other kind of tasks that we get involved with are indirect rates, helping clients get an adequate or an approved accounting system, cost and price analysis, putting together cost proposals, working on the SBIR program, among other things. Some of my two of my other colleagues here, Melissa and Steve. If you do contact us, it's very likely you'll interact with one of them. You see our individual email addresses there, but if you'll just email us, support@leftbrainpro.com. Any questions? If we don't get to your question today that you put in the Q&A, we'll get back to you. If a thought comes up after the fact, maybe you're coming back and rewatch this, and a question comes to mind, just shoot us a question at support@leftbrainpro.com, and we'll be sure to get back to you. All right, so today for Cost Accounting Standards, we will discuss the purpose of CAS. We will actually list and go through in a little bit of detail each of the 19 cost accounting standards. We'll identify the CAS applicability, and we'll describe the disclosure process. We do have our first polling question right out of the gate here, Liz, if you want to kick that off for us, please.
All right, that sounds good. We'll get that teed up. And the first poll is, what best describes your understanding of cost accounting standards? So we'll try to leave these polls open for about 40 seconds to a minute here. And like Robert said, there's a lot of material to cover. So the faster we see responses come in, the faster we'll be able to close those polls down. And also, as I've been kind of out saying hello to everyone in the questions box, I want to make sure to also mention that we have Jenny on the line as well with us. And Jenny works with Robert, and she's going to be taking a look at those questions and aggregating them. So when we get to the end, we'll hopefully have a chance to take some of your questions. I'm also seeing in the questions box, a few of you have let me know that you're having difficulty submitting your response to the poll question. So there's a little bit of a quirk right now with GoToWebinar. If you have the GoToWebinar screen full size, it's sometimes not accepting your responses. So if you can go ahead and just shrink that screen, just minimize it just a little bit, go ahead and try to respond to the question at that point, and it actually should allow you to respond. It's kind of, like I said, a quirk, but hopefully if that works for you, just shrink the screen size a little bit and then select your answer. We'll leave this open for about 5 more seconds here. All right, and we'll go ahead and close this down. So Robert, are you taking a look as well?
Yep, I can see them on my end here.
Perfect.
Yeah, so it looks like most of the group knows a little bit, with some people saying they're fairly knowledgeable. So for those of you in categories A and B, hopefully you walk away today with a little better understanding of the cost accounting standards. So what is the purpose of CAS? And again, I'll probably say cost accounting standards and say CAS at times. When I say CAS, that's what we're talking about. Basically, in simplest form, the cost accounting standards were put in place so that contractors would disclose in writing and follow consistently their cost accounting practices. Really, this is a way of the government kind of leveling the playing field. So think of CAS kind of like GAAP. You know, we have GAAP that applies to all companies, generally speaking, right? But you know, we certainly use the GAAP principles to guide what we do in our regular financial accounting. And CAS is very similar. Again, we'll talk about very specific CAS applicability. But even when CAS is not required, it's certainly a good guideline to use when making decisions about how to present financial information related to government contracts. Part of the requirements of CAS, again, are that the contractors disclose their practices in writing, which means maintaining a written disclosure statement and submitting amendments or revisions as necessary to that. That they consistently follow all of those written policies, that they comply with all CAS when they are required to comply with all CAS. There are some exceptions to that. And that they agree to an equitable adjustment if the contractor changes a practice. So that is something that does happen over time. Again, much like GAAP, right, that oftentimes companies have options on how they handle a transaction, but should they change the way they handle that transaction, right, obviously, sometimes we have to go back maybe and reevaluate, restate something on the financial statements. Very similar practice here with CAS. That if a contractor chooses one method and then later decides to change that method, they can do that. They have to disclose that they've made that change. And then again, there may be some type of adjustment that needs to be made to their rates as well. And then the other part of being CAS covered or having a CAS covered contract and being forced to comply with all of the standards is that as a contractor, you may have to agree to an adjustment if you fail to comply with CAS. So basically, if you go through an audit and the government finds that you did not comply with CAS or did not comply with your own disclosure statement, that, you know, essentially there can be a unilateral adjustment that is made. There is a flow down requirement to this, so it should be included in subcontracts. and the prime contractors need to monitor their subcontractor compliance, just like they do with other aspects of government contracts, right? And this course here really isn't about the contract management side, but as contractors, right, as government contractors, I should say, we do have a certain responsibility to monitor our subcontractors. All right, Liz, another one of our random polling questions here.
All right, sounds good. So this next poll is, I had to abbreviate this. Cost accounting standards requirements can be disclosed verbally by a contractor or subcontractor. True or false? Everyone's getting their responses in very quickly. So that's fantastic. And we'll give it about 5 more seconds here before we close the poll. All right. 1/3 say true and 2/3 say false.
So the correct answer is false, right? We just said on a couple of those previous slides that CAS has to be a written disclosure statement. So simply saying what you're doing is not sufficient. All right, now we're going to get into the cost accounting standards themselves. There are 19 standards. You will see them labeled 401 to 420. 419 is reserved, so it's blank. You'll see that when we get there. That's why I say that we do have 19 standards, so don't be confused when we get to the end and you see CAS 420. All right, 401, consistency in estimating, accumulating, and reporting costs. CAS 401 is set up to achieve consistency in the cost accounting practices used by a contractor when they estimate the cost for their proposals and for how they accumulate and report those costs during contract performance. And I will tell you that this is probably one of the #1 things that we find wrong with most small business government contractors. Even if they're not CAS, even if they don't have any CAS-covered contracts and otherwise don't have a requirement to follow this standard. And let me pause there for a moment. We're going to talk about, again, applicability later on. One of the things that I want to set forth right now when we talk about CAS overall is, even though you may not have any CAS-covered contracts, and you may think that CAS doesn't apply to you, the reality is when you go through audits, the auditors are going to use CAS, and I hate to say it, they're going to use CAS as a stick to beat you with, right? They're going to come in and say, you knew or should have known kind of stuff, and they're going to point to CAS, and to a degree, you can push back and say, well, I don't have any CAS-covered contracts, and they're going to say, yeah, but this is a good business practice that you should have followed. You should have known to do these things. So we can have a separate conversation offline if you don't agree with that, but that's kind of the reality of what happens. The other thing that you'll see a little later on when we get through some of the specific CAS statements is that they are required regardless. So there are some very specific situations where even if you don't have any CAS covered contracts, certain types of costs, if they apply to you, you do need to follow CAS for them. But back to CAS 401 here, I said that what we find a lot of times with small business, government contractors, is that there's a big disconnect between the way they are estimating the costs, right, their bid and proposal process, and the way they're actually accumulating and reporting the costs. And let me give you a perfect example. Had a client call a couple of years ago, great gentleman, and he says, Robert, he says, we got this big contract, we're doing all this work. He says, we're shipping stuff out, we're sending invoices, we're getting paid. But at the end of the month, he's like, there's just not much money left. And when I look at the reports, we're losing money on this contract, and I just don't understand why. I don't understand what's happened. So I went out there, I spent a couple of days, and actually without even digging into any of the financial statements, didn't have any numbers in front of me, simply having a conversation with people from the accounting team, and for their purposes, it was their program and business development are kind of the same team. Everybody was in the room. And when we were talking, I learned a couple of things. One thing that I learned is that they had a significant amount of overtime, about 15 to 20% on average, year over year. And part of that is because of their geographical location and the ability and the nature of the work that they were doing. Their ability to attract and maintain employees is difficult. So they paid a lot of overtime to get the work done. And the point here, what we discovered through conversation was that they were paying the overtime, right? Because otherwise employees would have screamed, right? So they were paying the overtime, was in payroll, was in the financial statements. But what we found out is that the way the business development and program team was pricing stuff out did not match the way the accounting team was recording the cost. And we discovered that the business development team was not proposing any of the overtime. The way the calculations were set up, none of that overtime was in there. Now, is that necessarily a violation of CAS? We could argue about that. But I think that what you can see here, again, from a best practice approach is that if you made sure the way you were collecting and accumulating costs aligned with the way you were proposing costs, there's a much greater chance that you would not have missed something and put yourself in a situation that you'd be losing money on a contract. One of the other things with CAS 401 is that it provides a basis for comparing those costs. Again, all about consistency there. Little diagram for you here. Again, just simply driving home that point, estimating, accumulating, reporting. I probably could have put those errors in both directions. It also includes the consistency in the structure and the level of detail. So not only, again, the methods, but down to the detail. A perfect example here is if you use standard cost in your collection method, in your accumulation and reporting, then you use standard cost in estimating. You can't say, well, we report it one way over here, but we're going to do it a different way over here. We have some clients who the way they capture payroll costs and report payroll costs, for example, is by labor category. They do a blended approach through standard costing. If that's what you do, then that's the way you bid it out. What we've seen sometimes will happen is the client will say, well, yeah, that's the way we report, that's the way we collect it and report it, but man, I'm going to be using a couple of really expensive employees over here, so I'd rather make sure that when I propose this out, that I put their actual labor costs in there because I'm going to be using them. Well, if that's not the way you collect and report it, then you can't propose it that way, okay? All right, 402 sounds similar, back to that consistency approach. It's the consistency in allocating costs incurred for the same purpose. What we're talking about here is that a cost is allocated only once and only on one basis to any contract or other cost objective. The fundamental requirement here is that once a cost is determined to be treated one way, it is treated that way all the time. We'll talk about that as well when we get to CAS 418. Couple of examples here. One is that once a cost is determined to be either direct or indirect, it's always that way, whether or not it's allowable and whether or not it is billable, okay? So a couple of examples here. Travel is, direct travel in support of client work is typically an allowable cost as long as you're following FAR 31. Typically an allowable cost, but there are times where contractors fail to propose travel. And if they do so, the government may not put travel as a line item on the contract. So if travel is not on a line item on the contract, you cannot bill it. What we've seen that happen many times, and the contractor will travel. They'll realize they can't bill that travel, and then they'll say, well, just go ahead and throw it into overhead so at least we get something back out of it. Nope. It was direct travel to begin with. It stays direct travel. It's always direct travel. The fact that you cannot bill it does not change that. And in fact, to treat it differently will get you into trouble. Another thing that comes into play here, and we see this a lot again with some very small businesses, owners of the company will often split their time between direct labor, particularly in the service industry, right? So very often what we receive is engineering companies kind of stand out. You have engineer who starts the company, They provide some of the engineering work, right? Direct labor on contracts, but as an owner, an executive of the company, right? They have G&A functions, right? So they may be doing business development, obviously HR, other kinds of things as an owner of the business. That's the G&A expense. Well, you have to be careful when you create your budget and develop their rates. If they work 50% of their time direct and 50% of their time doing G&A, running the business kind of stuff, then you need to build the rates that way. You cannot put, for example, their full salary in G&A, and then when they charge direct, you end up charging all of their G&A on top of their salary for direct. That's double dipping, and that's a no-no. That while that one person may be split, the nature of the work that they're doing is different. So it's okay that part of their work is direct and part of their work is indirect, as long as you budget it and develop the rates appropriately. CAS 403 deals with the allocation of home office expenses to the segments. Essentially, when we talk about indirect rates overall, if you were with us on some of the previous webinars where we talked about the fundamentals and advanced indirect rates, we're really talking about fair share kind of stuff, right? So we want to make sure that we have an allocation method for any of those rates. And here we're talking about home office expenses, similar concept. That each segment, could be a division, location, et cetera, however the business is organized, receives or bears its fair share of those home office expenses. One of the other things I want to throw in here, kind of in the middle as we talk about CAS, you will see that when we go through CAS and maybe you're thinking about your business, you may say, well, that doesn't really apply to us. We don't have a separate home office, for example. And that might be true. So if you otherwise had CAS, you ended up in a situation that you had CAS-covered contracts and maybe you didn't have a home office that was trying to allocate expenses to you, then, while you would technically have to still comply with 403, there really may be nothing for you to do. You'll see a similar thing later when we talk about pensions and some stuff. A lot of businesses do not offer pensions anymore, not in the way that we used to think about pensions 20 or 30 years ago. So obviously, again, in that situation, you may look at some of these standards and say, yeah, that doesn't really apply to what we do. CAS 404 deals with capitalization of tangible assets. Again, if you've kind of got gap in the back of your brain, right, when we start talking about capitalizing tangible assets, there's certain things that we have to do. There's certain ways to do it. And so if I went to gap, I'm sure I would find an ASC that would provide me some guidance. Here, for CAS, 404 establishes the criteria for the acquisition cost of tangible assets that are to be capitalized. CAS 404 is not talking about depreciation or the disposition of fixed assets, which we will talk about in 409 in a few moments. You do need to have a written capitalization policy. Should go without saying, given the first polling question, one of the first polling questions that we talked about, all of your CAS, all of your accounting policies and procedures should be written, right, in order to comply. Note that the dollar amount of your capitalization policy needs to align with the size of your organization. Many of you may be aware that the IRS has a safe harbor for capitalization, minimum of $2,500 up to $5,000. We know and advise that many clients will even go higher than that, sometimes up to $10,000 or more. If you're a small business, a $10,000 capitalization policy would probably be difficult to push past an IRS auditor or a government auditor. If you're a $10 million company, a $5,000 or $10,000 capitalization policy probably makes sense, and again, aligns with the size and complexity of the organization. We're a small business ourselves, and I'll tell you that right now we have a $2,500 capitalization policy. We stay within the IRS safe harbor. Works well for us because we can buy all of our laptops and stuff like that under the $2,500. We still obviously track those things for asset tracking purposes, but we don't have to deal with capitalization of those. CAS 405, this is a big one. CAS 405 deals with unallowable cost. We do have an unallowable cost webinar coming up. Again, going to be 90 minutes. That's another one of those topics. We could probably turn it into an 8-hour full day seminar. But when we talk about unallowable costs, then I'll be referring back to 405. So please take a couple of notes here. This is to facilitate the negotiation, audit, administration, and the settlement of contracts. Specifically, it deals with the identification of costs described as unallowable, and the cost accounting treatment that's to be accorded to those costs, okay? So when we have unallowable costs, let me pause here and kind of insert, if you're new to government contracts and I use the term unallowable costs and you're wondering what in the world I'm talking about, essentially the government has determined that there are some costs that are not a requirement to do business with the government. They may, and quite often usually are, otherwise legitimate business expenses. They may or may not be tax deductible. I always have to make that clear that when we talk about unallowable costs, many of them are still tax deductible. Always talk to your tax CPA about that. But the government has said, these are costs that you do not need to incur in order to do business with us. Some of the common ones are alcohol. So if your employees go their own travel, they go out for, a burger or steak or whatever, at the end of the day, you reimburse them for a beer or a glass of wine, may or may not be tax deductible. Government says while they need to eat, they don't need to consume alcohol, so we don't reimburse the cost of alcohol. Some other common unallowable costs are interest and finance charges, charitable contributions, again, are another big one. Again, may be tax deductible, but you simply can't include them. CAS 405 helps us deal with those. Note that when we talk about CAS 405, it's not talking about the specific unallowable costs. Those you'll find in FAR 31 and in the DFARS 231. You may have other specific unallowable costs that are called out at the contract level, which we also need to be concerned about. But this is really about how we actually treat the cost, not the identification of the cost. And it's very important that your unallowable costs are segregated in your reports, ideally segregated very clearly in the general ledger, and that they are removed from any billings or claims. CAS 406, the cost accounting period. I'm going to jump to my little note at the bottom of the screen here. Sounds like one of the GAAP principles, right? So when we did the GAAP principles, I think in the foundations course of this series, where we talked about the 10 GAAP principles, one of them is a cost accounting period. Same thing here for CAS 406. The contractor needs to select a time period for the cost accounting, for their cost estimating, accumulating, and reporting, right? The whole idea, same thing with GAAP, is to reduce the effects of variations in the flow of costs, enhances objectivity, consistency, and verifiability, promotes uniformity and comparability. It must either be the fiscal year, either calendar or otherwise. So just like for tax purposes, we have clients that elect a fiscal year that is different than the calendar year, and that is perfectly acceptable for government contracts. In fact, there are a number of large government contractors, and maybe even some smaller ones out there, that choose to align their fiscal years with the government's fiscal year being October 1st to September 30th. It's not a requirement, but they can do that. If they do not choose the typical fiscal year, there needs to be some other period that's agreed to, another annual period that's agreed to by the government. Quite honestly, I've never seen anybody not have either a calendar year or the typical fiscal year of October 1st to September 30th. CAS 407, dealing with standard costs for direct material and direct labor. Excuse me. This cost accounting standard provides the criteria under which standard costs may be used to estimating, accumulating, and reporting costs. Remember when we were talking about CAS 401, I said if you use standard cost for reporting purposes, then you need to use standard costs for estimating purposes. I'd be curious, I should have thrown a question in here, maybe if somebody wants to throw something in the Q&A back at me. I'd be curious how many of you are using standard costs versus actual costs. We derive our clients to actual cost environments, even manufacturing companies. We have found that many of the newer accounting platforms make actual costing a whole lot easier. Eliminates, while you certainly still have variances and stuff to deal with, for other reasons, it really makes reporting a whole lot easier, better understanding of cost, better estimating of those costs. And it eliminates issues like this, where if you're reporting an actual cost and you propose an actual cost, then we don't have to deal with the standards and the variances that are involved. And quite frankly, that's one of the issues with CAS 407 and companies that do have standard cost in their setup, is that you have to make sure that you're reviewing those variances, the terminology here of disposition, right? So you've got to clear those out. You can't let them just linger out there. You do have to address those variances at year end. And part of that, again, continuing on 407, having a logical practice for the establishment of standards. One of the things that I have seen at times is that companies will say, yes, we have standard costs. And a couple of my questions are always, how often do you update those standards, and when was the last time you updated those standards? I will tell you that auditors are going to expect you to update those standards at least annually, at the very least annually, right? Because certainly within a 12-month period, you've probably had pay raises. You've had other changes to your indirect rates, again, assuming that you're building your budgets. Hopefully you're building your budgets, topic for another webinar. Hopefully you're building your budgets. You've got those provisional forward-looking rates. If you build those every year, those rates do change every year, even if they're somewhat steady. There are some changes in those rates. So obviously the overhead that's part of your standard cost would have to be updated. That would drive you to update those standard costs. The other thing is, right, that there are differences in materials, right? We see swings in the purchase price of materials. That kind of information needs to be updated. The other thing that needs to be updated with your standard cost is, let's say your current standard was based on buying material in quantity of 100. Now you're proposing, and as long as you're proposing standard cost, that's okay. But maybe now you're proposing something to the government that's quantity 500. Well, obviously, you going out and buying material at quantity 500 is going to be a different price than going out and buying material at quantity 100. Same thing is going to be true for your labor, right? So when you put this part through the line, if you're going to run 500 through the line this time instead of 100 through the line, then you probably should have, better results overall, right? So you're going to need to update your standards in situations like that. So even if you update them annually, again, good practice, we recommend that annual update be once the budgets are approved. So you've got those new overhead rates to plug in there. But if you're putting out a big proposal and there's a significant difference in the quantity, you're going to need to update those standards for that quantity as well. CAS 408, accounting for cost of compensated personal absence, right? So probably most of you have some type of PTO, sick vacation out there, whatever you call it, is kind of irrelevant here. The government doesn't really care. I will tell you that for the most part, we push not even for the most part, we simply push all of our clients to go to a single PTO. It's much easier to administer. Takes the frustration and hassle out of what somebody is sick. Did they go on vacation? Did they have a mental health day? Just give them PTO, call it PTO, and move on with life. You may even decide that you want to include holiday in that, and that's okay. One of the key things, and again, this is where we see, even without CAS being applicable, this is where we see a lot of small businesses stumble, is they will have PTO, whatever they call it, even if they break it up. And then when you look at their fringe expenses over time, you see these big jumps, mountains and valleys in there for compensated absence, right? So when do people typically use their PTO? Holidays is a big time, right? Especially depending on how the holidays fall, it's not uncommon, right, that around Christmas and New Year's, people might take 2 or 3 days of PTO and end up with you know, with a holiday in there, and maybe when the business is closed, they might end up with 10 days or 2 weeks off by only taking a few days of PTO. But you have a bunch of people take PTO, right, all at once. Then back in the first quarter of the year, PTO typically falls off when it's the peak again in the summer, right? Kids are out of school, spring break, going to the beach, all that kind of stuff. We see that big peak in there again. Okay, well, what 408 says, and what you should be doing otherwise anyway, right? If you have a policy that says people earn PTO, you know, per pay period, then you need to figure that out. That's what needs to be listed as an expense. It's when it's earned, not when it's used, okay? So again, figure out if you're not doing that. Pretty easy to do. Put it into a spreadsheet. You can list your employees. You can list how much they're getting, put in their salary, you know, whatever their hourly rate is, multiply it over, and then you can see what their balance is, right? So you just want to make sure you got a couple of things, not really talking about balance sheet here, but you do a balance sheet adjustment that you need to make, but you need to have that monthly expense because it was earned, not because it was used. All right, Liz, we got another polling question here. See if everybody's paying attention to what we've been through so far.
All right, that sounds good. So this third poll is live. The purpose of this cost accounting standard is to facilitate the negotiation, audit, administration, and settlement of contracts. And while the answers are coming in, I am just going to chime in, Robert, and just comment on my background in accounting is not from governmental contracts or governmental accounting. And so as you're teaching specifically about these cost accounting standards, it's very interesting to me because it actually reminds me, like, we know that there's the FASB codifications for accounting standards, and then there's GASB for accounting standards, and that's kind of on the technical accounting side of things. And then within the private sector, there's cost accounting, and it's really interesting to learn that on the governmental side of things with contracts, there's a whole nother set of standards that talk about how the cost side of things are to be managed. So it's very interesting to learn about this.
It is interesting, and and one of the interesting things for me that I've kind of hinted about a couple of times here is that in many ways it looks and sounds a lot like GAAP. It looks and sounds a lot like some of these other principles that we employ. And one of the things that I remind people as government contractors coming in, again, we deal primarily with a lot of small businesses. They tend to be, excuse the term, right, a little more loosey-goosey in their accounting. They not really doing everything the way they should, may not be GAAP compliant, and they kind of wonder about all of this stuff. But really, you start employing some of these things, even if you're not required to, it really just helps you better understand your costs, right? It helps you understand where the money is going. Just in the case of what I was saying with the PTO, if people are earning it every month and it's an expense to you every month, then it should show up in your financial statements every month, right? And then you don't see those swings of seasonality of when people are actually using it.
So we went ahead and closed that poll down and shared the results. Which cost accounting standard?
So it's B, 405. Remember when we were talking about 405, we said that was the accounting for unallowable costs is what was used to facilitate the negotiation, audit, and administration and settlement of contracts. So B there, 405. All right, let's carry on here. Next up is CAS-409, the depreciation of tangible capital assets. And remember a moment ago we were talking about the capitalization of tangible assets. And they said that when we got to 409, we would be talking about the depreciation. CAS-409 provides the criteria for assigning cost of tangible capital assets to the cost accounting periods. It's important that we have good estimated residual values and service lives based on experience for all of these fixed assets. So should be no surprise here that even for government contract accounting, we're going to have different depreciation values for tax and book purposes, right? So what we're allowed to deduct for tax is one thing, The way we present stuff for GAAP and what's allowable from a CAS perspective are different. CAS 410 is the allocation of business unit G&A, or general and administrative expenses, to final cost objectives. Quick reminder there on final cost objective, we're typically talking about contracts, right? So a contract or a job or a project is a final cost objective. Again, CAS 410 provides that criteria, assigning those final cost objectives, furnishes guidelines for the types of expense that should be included in the G&A pool. Give a little pause for a second. For those of you who were with us when we talked about G&A back in again, a couple of the other webinars on indirect rates, what did we talk about with G&A? What were those expenses before I move on to the next slide? G&A expenses, if you remember, I said those were the expenses for running the business. CAS 410 describes it as G&A must be incurred for managing and administering the whole business unit. Remember, that's what I said before, is that when we talked about overhead, we talked about costs for supporting clients or customers, or supporting projects in general. But the G&A was the cost of running the business overall. And here specifically, CAS 410 says that G&A costs need to be grouped in a separate cost pool. Again, remember that a lot of times when we're dealing with commercial entities, we will see this. They will have a good, clear cost of goods sold, or COGS, or direct, whatever they decide to call it. And then oftentimes they have this other, they have this mentality of everything else is overhead, or everything else is SG&A, whichever terminology that they like to use. But CAS says that we actually have to separate overhead and G&A. So now you see and understand why we do that. Also note that there's a FAR requirement in FAR 31. It's the cost principles generally as FAR 31 requires these, again, G&A expenses to be allocated to a final cost objective through a base that contains unallowable costs. This is one of the key things that we find a lot of companies do incorrectly. This is low-hanging fruit for auditors. They know that unallowable cost is something in general that many contractors get wrong. They have improper treatment of unallowable costs. They don't segregate the unallowable costs. And then again, one of the other things they find is even if they do segregate the unallowable costs, they fail to properly include them in the appropriate base, which is what I refer to as that little penalty. Again, if you remember, I think we did that in the advanced indirect rates course. So if you didn't get to see that, pick that up and go back and look at it. There is a little bit of a penalty, not only for the unallowable cost itself that is unbillable, but now you have to include it in the base of some of the indirect pools. And so you kind of have an additional penalty because now there's a portion of that other pool that does not get billed back to the government as well. All right, CAS 411, accounting for the acquisition cost of materials. Again, requires written policies and procedures. I shouldn't even have to put that on the slide here. Direct items essentially need to be very clearly identified. So you have a couple of situations here where if you're a manufacturer or even assembler, let's say you do what I call light manufacturing, you do assembly kind of work. You may have a physical warehouse or an inventory room or whatever the case be for your size of business, right? And when you do work, you go out and you buy material, right, to carry out that work. Some of the time when you buy that material, you know exactly what job that is for. And when you do, that needs to be part of the purchase order, needs to be part of the records when it comes in. And so when it comes into the inventory room or warehouse, whatever the case may be, that it's tagged appropriately in the system and physically, right? So that somebody knows, somebody's in the system, right? They're I'm looking for widget ABC, and they go in there, it's not either not available to them, or they can see it, but they see that it's assigned to another project, right? That they can't take it because it was bought for that project. That's one of the requirements for 411. But you might say, well, but we still have some common inventory. We have things that we use across all programs, you know, nuts, bolts, screws, adhesives, things like that, labels. That's okay. You can still have a common inventory. You can still buy things into the common inventory, but at the point that you identify that those items are for a specific project, for a specific end cost objective or final cost objective, then they need to be noted as such, right? And you do that through your system, usually through some type of reservation and assignment process within your accounting system. CAS 412 deals with the composition and measurement of pension costs. When we talk about pensions here, we're primarily, I will say, talking about defined benefit. There is a defined contribution aspect of this, but typically is not much of an issue for most companies, right? Because of the defined contribution, it's very clearly defined up front. It's a periodic expense. We pay the, we incur the expense, we pay the expense. As long as there's not a situation where you're incurring the expense and not paying it for some reason, which would be a whole other conversation. Defined contribution plans usually are not much of a problem here. It's those defined benefit plans, the old pension plans, again, that many of us, some of us, I'm in that middle-aged stage. I'm 45. I guess I'm technically middle-aged. I don't feel middle-aged, but I'm at that age where I'm young enough for some things, but I'm old enough to remember for sure here what some of the old pension stuff was. Again, I already said that think about those defined benefit plans. If you recall, if you're not familiar with defined benefit plans, there are some very complex actuarial calculations, right? You got to look at, the people that are in the plan and what are their expected lives and a lot of stuff that goes into it. ERISA primarily deals with the funding aspect, right? Making sure, and that's a whole other conversation about pension plans and funding and following ERISA. Conversation beyond the scope of this. CAS 412 here deals specifically with the cost accounting treatment of those things for government contractors. Liz, we got a polling question coming up in just a second, so let you get queued for that. The note here at the bottom of the screen, you're going to see this note on a few more of these slides. This is where I said earlier that there are provisions in the FAR that make certain CAS applicable to all contracts, even contracts which are not CAS-covered or subject only to modified CAS-covered. Okay, so this is one of those situations that, again, if you happen to have a defined benefit plan, CAS 412 likely applies to you and you need to deal with it. If you have a defined contribution plan, probably not something you need to be concerned about right now. All right, with that, Liz, if you'll kick off that question for us, please.
All right, that sounds good. Poll number 4, and again, this is the 4th of 7 poll questions. Cost accounting standards that state G&A expenses must be incurred for managing and administering the whole business unit. Apologies, got cut off from the very end of the question. Robert, do you have the end of the question there in front of you?
Yeah, so on the slide that I have, it says, in which CAS, or in which cost accounting standard, when we were talking about G&A expenses must be incurred for managing and administering the whole business unit, and they have to be in a separate cost pool and allocated only to final cost objectives. Which one was that?
Yes, that's right.
We were talking about G&A.
Looks like that everyone's doing pretty good with this question. We'll leave it open for about 5 more seconds here. All right, I'll go ahead and close that down, share out those results.
Yeah, so looks like 78% got it right. CAS 410 deals with G&A, so very good. All right, on to 413, adjustment and allocation of pension costs. Again, very specific requirements here for pension-oriented stuff. It deals with assigning the actuarial gains and losses to the cost accounting periods, the valuing of pension fund assets, and the allocating of pension costs to segments. What do I mean by segments? Again, if I think about pensions, it's usually for larger companies. When we talk about segments, we're usually talking about divisions within that company. May not be the best example, but if you think about something like a Boeing or a Lockheed or a Northrop Grumman out there, old companies that have been around for a while, probably still, I bet all of those still have some pension plans, for older employees and retirees that were there. They probably still have some of those pension plans around. Obviously, all the new employees, probably in the last 20 years, everybody's getting a defined contribution 401k type of plan. But those bigger companies, they have different operating segments, different divisions. They've often bought up other companies along the way. They may have assumed some pensions along the way in some of those mergers and acquisitions. Again, 412, 413 here deal with that and allocating those costs appropriately. Note that the provisions here, when we talk about 413, are more stringent than what ERISA requirements are, particularly with the frequency of the actuarial valuations and the methods of valuing pension fund assets. What you need to do here may be in addition to what you have to do to comply with ERISA. As I said early on, I think in the very opening moments of today's presentation, that this was not meant to be a deep dive on any one of these specific cost accounting standards. You can see here, obviously, with 412 and 413 alone, probably be a half-day presentation just on these. But obviously, again, they would only apply to certain contractors. The goal for today is that you walk away here with at least an understanding, so that if you know in your business you've got pensions, or if you're a CPA out there and you have clients who are doing, if you're in a CPA firm and you have clients who are doing government contracts, hopefully you're getting some keywords and phrases out of here today. And if you hear one of your clients mention one of these things, you go, hey, wait a minute, I think I heard Robert talk about that the other day on this cost accounting standards webinar. I need to go back and look it up. So that's what our goal is as we go through here today. 414 is the cost of money, or the facility's capital cost of money. We gave you a calculator for that a few weeks ago in one of our presentations. If you need help calculating that facility's capital cost of money, go to our website. It's leftbrainpro.com. You'll see in the top menu bar there tools, very clearly tools. Click on tools and you'll see that facilities capital cost of money calculator available to you. CAS 414 here recognizes that the cost of facilities capital, they recognize it as a contract cost. You may recall that I refer to this as an interest-like imputed cost. Remember, the interest is not an allowable cost for government contracts, but cost of money is, right? The government does recognize that contractors tie up capital in facilities, in other capital projects to do the work. So they do provide, even while it's not interest, they provide a mechanism to deal with that cost of money. Important to note here at the bottom that CAS 414 and cost of money only applies to facilities that are being depreciated, not to those that are allocated based on usage. Let me give you a good example of a usage. Maybe it may not be the best example in today's world, I don't know. I remember back when I started in this career, we still had copiers and printers that had code boxes on them. And every time we printed something or copied something, you had to type in the project code. And the reason for that, right, was at the end of the month, they figured up the cost of running all the copiers and printers. Actually, I was the guy who was responsible for that. I was the young new accountant in the company. So I had to figure out what it cost us to lease all the copiers and printers, what the monthly fees were, the cost of paper, accumulated all that up. I had to figure out, I ran a report, showed me all of the copies and prints that were made, divided it up, figured out what that was the price per copy and print, and then we allocated that cost out. Because we were allocating that cost out on usage, we could not have used cost of money as a factor included with the capital that was tied up, buying those printers or other related devices. So again, just the clarification there, the cost of money is only for facilities that are being depreciated, not to those that may be allocated on some kind of usage. 414 cost continued here. As I already said, it's an imputed cost. It does need to be associated with each indirect cost pool. Got a little reminder there to go to our website again for the cost of money calculator. One of the things that you will see in the incurred cost proposal, which is going to be the last, that's number 12 webinar in this series this year, so that's actually going to occur in December. But if you look at the incurred cost proposal, one of the things that you have to do is allocate your assets across the cost pools. So you'll have a list of assets or a list of grouping of assets, and then you have to identify, are those assets in overhead? Which overhead are they in? Are they in a facilities or intermediate pool? Are they part of the G&A pool? And then you can have a cost of money for each of those pools. So it gets to be a bit complex. You can also have cost of money calculations for individual contracts as well. All right, another polling question here, Liz.
All right, that sounds good. So we're launching our 5th poll question. Cost Accounting Standard 413, adjustment and allocation of pension costs establishes criteria for all of the following except. And since you have the slides up on your screen, you want to go ahead and just let us know that full response, the full first response, what that says. Assigning actuarial gains and losses to cost accounting. I think it said for future accounting periods.
Yeah, sorry, I was on mute just talking away. CAS 413, the adjustment and allocation of pension costs, establishes criteria for all of the following except A, assigning actuarial gains and losses to cost accounting periods, B, valuing pension fund assets, C, measuring deferred compensation costs, or D, allocating pension costs to segments.
Okay, very good. Thank you for reading those off. When I launch the quick poll, I don't have the screens up on my slide. So hopefully everyone's having good success responding to that. We're going to close this down in a few seconds. All right, share those results. Now this looks like it was a bit of a tricky question because the answers are spread across those 4 answers pretty closely.
Yeah, and it looks like 37% got it correct. The answer was C, Charlie, measuring deferred compensation costs. That was not part of what we talked about with pension, right? So, and if you kind of read A, B, and D, it kind of stands out, right? Actuarial gains, sounds like it's related to pensions. B, valuing pension fund assets. And D, allocating those pension costs to the segment.
Very good.
All right. Carrying on, we've got a few more standards to go through, and then we'll get into some of the other applicability of CAS before we get into Q&A. All right, so CAS 415, accounting for the cost of deferred compensation. It provides criteria for measuring deferred compensation. It applies to all deferred compensation costs except for compensated absences and pension costs, which we previously talked about in CAS 408 and 412. Again, this is one of those CAS requirements that may not apply to you. If you do not have deferred compensation, again, outside of regular compensated absences or pension costs, it's likely or possible that 415 may never apply to you. Deferred compensation costs are measured by the present value, pretty common. And if we think back to GAAP and the way we do stuff, right? We're always talking about present value of future benefits to be paid. And they're assigned to the cost accounting period in which the contractor becomes obligated to compensate the employee. Here, think things something like stock options or similar plans. And this is my terminology here that you would typically find, again, in more complex organizations. I have to say that of all of the clients that we deal with, again, we're lucky that and blessed that we have a couple of Fortune 500 companies that we do a small amount of work for in comparison to how big they are. Most of our clients are small companies, and deferred compensation and stock options are a wish list item for them at best. Again, the note here at the bottom, if you do have deferred compensation, there's a FAR requirement that makes CAS applicable to all contracts, even contracts which are not CAS covered, or those that are subject only to modified CAS, okay? So beware, again, that, as I was saying earlier, there may be situations where certain CAS apply to you, even if you don't have CAS covered contracts. CAS 416, accounting for insurance costs, deals with the measurement of insurance costs and their assignment to the accounting periods. It does cover accounting for purchased insurance, self-insurance, and payments to a trustee of an insurance fund. Really here, the takeaways, think primarily self-insurance, right? That's usually where we have variations in cost, right? If you are a business, you've got a typical plan through United Healthcare or Molina or Blue Cross Blue Shield, whoever it is. There's a lot of companies out there. You're paying your monthly premiums, pretty simple, straightforward, periodic costs. Life is simple and easy. If you're in a self situation where obviously you have stopgap and some other things going on, again, there's some actuarial costs and stuff that are involved. That's where we have to refer back to 416 here. The reminder again, 416 does apply even if you don't have CAS covered contracts. This is another one of those tricky ones to jump out and get you. 418 deals with the allocation of direct and indirect costs. You may recall when we were talking about the fundamentals of indirect rates and the advanced indirect rates, we talked about having a causal, and I believe we've got a typo there. We tried to fix it, and I think sometimes Microsoft thinks it's smarter than I am. I'm trying to make sure that I fix that. It shouldn't be a casual. It should be a causal beneficial relationship between the pool and base. And in fact, it needs to be a logical. We've got a double whammy there, so shame on me. It's supposed to be a logical, causal, beneficial relationship between the pool and base. For example, the one that I really like to use is fringe, right? Our fringe expenses, you may recall, I always said those were expenses that were incurred for maintaining W-2 employees, right? So fringe are things like employer taxes, health insurance, retirement, and they're for W-2 employees. So how would we normally allocate out our fringe expenses? Over all of our W-2 labor, right? If I'm incurring those costs for my W-2 employees in the pool, then it would make sense that the base would be my W-2 labor. A little note here, if anybody out there deals with the AE or architect engineer firms that are doing business with the federal government, well, actually even with the state government, they have a unique requirement that fringe and overhead are both allocated only over direct labor. Again, very clear for specifically the AE, architect, engineer firms that are doing business with state and federal governments, think Department of Transportation primarily. They have a requirement under the AASHTO guidelines that direct labor is the only base for both fringe and a single general overhead. Flies completely in the face of what we normally do for government contractors, does not align with what we talked about in the fundamentals and advanced courses of indirect rates. If you are an AE firm and you're having trouble, I suggest you contact us or contact somebody who's very familiar with the proper calculation of indirect rates. All right, 419, remember I said was reserved. So now your 19th CAS is actually number 420. Deals with the accounting for IRAD or independent research and development and BMP or bid and proposal costs. Simply says that they do need to be collected separately and they are otherwise treated as direct costs. So when we calculate your indirect rates, even though IRAD and BMP are otherwise indirect in nature, we treat them and calculate them as if they are direct. This is another one of those things that, from an auditor's perspective and the proper calculation of rates, this is one of those things that many contractors get wrong. Auditors know they get it wrong, and even though it may only have a minute effect on the proper calculation of the rates, right? Auditors, right? They're always looking for something. They got to make their earning. That's our little joke, but there's some seriousness to it, right? That they got to earn their living. So they know that with unallowable costs that I talked about earlier, contractors get it wrong. They get the indirect rates calculated incorrectly because they don't include the they don't include the unallowable costs in the proper base. Again, might be a minor impact on the rates, but every little bit gets it. And this is another one of those areas. Again, FAR 31 here makes this applicable to all contracts, even contracts that are not CAS-covered or maybe subject only to modified CAS. Okay, Liz, we got another polling question here for you.
And keeping with the theme, in CAS 415, accounting for the cost deferred compensation costs are measured by the future value of present benefits. True or false?
And I think if you think about GAAP, you should be able to get this, whether you know CAS, right? Think about how do we normally value things in GAAP.
And this is interesting because in GAAP we talk a lot about the present value, and here we're talking about future value of present benefit. So we'll go ahead and close this down. We're about 60-40.
Yep, and actually this was a tricky question. GAAP would still have taken you to the correct place, but this was worded a little tricky. The answer here is false, right? We don't measure the future value, right? We measure the present value of future benefits. So it was just a tricky wording of the question, and obviously we got some people. So.
That's right.
They didn't have their afternoon coffee yet. Yeah, if you don't have your coffee, reach over there and get a little bit. All right, let's talk about CAS applicability and specifically about types of CAS coverage. We're going to talk about full and modified CAS. For full coverage, it requires that the business unit comply with all of the CAS that are specified, that are in effect on the date of the contract award, and with any CAS that become applicable because of a later award CAS-covered contract. Little confusing in the way that's worded. One of my general cautions here, and I always say this with all kinds of contract-related stuff, make sure you have the requirements at the date of the contract award. That is always one of the key things in contract management, whether we're talking about accounting or other aspects of government contracts. I always tell people, make sure you have the version of the FAR clause, you have the version of any terms and conditions from your prime, whatever the case may be. You want the copy that was in effect at contract award. That is very key. You'll also notice here that you may be required to comply with future CAS if you get a later CAS-covered contract, right? So you may have to work backwards on some of this, okay? Note that full coverage applies to contractor business units that receive a single CAS-covered contract award of $50 million or more, or they received $50 million or more in net CAS-covered awards during its preceding cost accounting period, okay? So you can see that CAS typically applies to larger companies, right? These are companies that are getting large dollar value contracts. It's important to note here that a contract is CAS covered, not an entity or a contractor. A company or an entity may need to comply with CAS, but it is actually the contract that is CAS covered, and that's what you are complying with. I said that we had full CAS. We also have modified CAS. Modified CAS requires coverage with CAS 401 and 402 dealing with consistency. 401, trying to go back. 401 dealing in consistency in the accumulating and reporting, estimating, accumulating, and reporting of costs. 402 in the consistency of allocating costs incurred for the same purpose. 405 for unallowable costs, shouldn't be any surprise there. And then 406, the cost accounting period. When we talk about modified rather than full CAS, it may be applied to a covered contract of less than $5 million awarded to a business unit that received less than $50 million in net CAS-covered awards in the immediately preceding cost accounting period. Don't get confused by this at the moment. I've got a little chart to show you. I can't even take credit for it. It's from DCAA. If you go to DCAA's website, you can get more information about it, but we will show you the chart here in a minute. Further information on modified CAS. If any one contract is awarded with modified CAS coverage, all CAS-covered contracts awarded to that business unit during that cost accounting period must also have modified coverage with some limited exceptions. A contract that's awarded with modified CAS coverage shall remain subject to such coverage throughout its life, regardless of changes in the business unit's CAS status during subsequent cost accounting periods. That last part is saying that if you get a contract awarded with modified CAS and you later get another contract awarded that has full CAS, that first contract that has modified CAS, you have to maintain modified CAS for it. The other contract in the future, if it were subject to full CAS, you would have full CAS coverage on that. So you can have a situation where you have different CAS requirements based on the contract. This goes back to what I was saying a moment ago. The CAS coverage deals with the contract, not the entity or the contractor, okay? Educational institutions are a whole other world. I just point out the information on here. Again, if you are, or if you work directly with, or if you have clients that's in the educational world, I would dig into this, some other very specific requirements for them. Not going to go into details here because usually these are less common for what we deal with, but just simply know that, again, if you're dealing with an educational institution, to dig into those requirements. Some exemptions from CAS are for sealed bid contracts, for contracts that were negotiated less than what we used to refer to as TINA. The Truth in Negotiations Act is now the Truthful Cost or Pricing Data Act, or TCPD. Again, so negotiated contracts less than that threshold, currently $2 million, are exempt from CAS. Small businesses are exempt from CAS, okay? Foreign governments, situations where the price is set by law or regulation. And I will say that, and I know that it does happen. I will say in my nearly 17 years of doing this, I've only come across one contract that was, I ever experienced that, and that was recent. It does happen, but it certainly hasn't happened much for me. And then commercial items. So if you're a contractor out there, and you're dealing with one of the big primes, and typically I'm talking about somebody, again, like a Boeing, Northrop, Raytheon, Harris, some of the other big companies out there, Lockheed Martin, for example. When you get your award and you're filling out all those paperwork, it's very likely that, and if you're in the accounting department, hopefully they forwarded this to you and didn't try to fill it out themselves. You should have gotten a CAS document to fill out, and you would say, and it has questions on there. It says, are you subject to CAS? Do you have other CAS-covered contracts? Is there an exemption? And the nice thing for almost all of our clients is that they get to check the box that says, we're a small business, so we're exempt. We have some clients that have a commercial item, so they're exempt. That's probably the two most common ones. Again, you can have negotiated contracts that are less than the threshold. We don't deal much with sealed bid stuff, though there is certainly a fair amount of that goes on. But I would say that the small business and commercial item exemptions are the two main ones that we typically deal with. Also, contracts or subcontracts of less than $7.5 million, provided that at the time of the award, The business unit of the contractor is not currently performing any other CAS-covered contracts valued at $7.5 million or more. Also, subcontractors under the NATO PHM SHIP program are exempt, and fixed price contracts or subcontracts awarded on the basis of adequate price competition without the submission of certified cost or pricing data. Very key part there. So don't read the first part and quit reading. Some people might read that and say fixed price contracts or subcontracts and go, oh, yep, that's me. Okay. Read the second part of that. It's very important that were awarded on the basis of adequate price competition. That means that there were two or more responsive and responsible bidders. So it's the government, particularly when we talk about DOD, if it's a situation where there was competition attempted, one bid received was the old terminology, that is not competition. Okay, even if competition was attempted and only one bid received, that is not competition. That is not adequate price competition. Okay, so again, make sure you read the second half of that and don't get caught up. Don't get yourself in trouble. All right, Liz, another polling questions, and then we're going to talk about the CAS disclosure.
Sounds good. This is our last poll. 7 of 7. Types of CAS coverage include, and here is a please select one with an all of the above answer. So full, modified, educational, or all of the above. And it does sound like for those in education, there's a whole different set of standards. And we have a good number of in-Corsa folks who do work in the higher education space. So that's good to know and be aware of the additional requirements there.
Yeah, and if they are in the educational space, not only with CAS, are there some unique requirements, but also with the cost principles in FAR 31. So if you're not familiar with the educational requirements over there, again, I would check those out as well.
Very good. Well, we're going to go ahead and close this poll down. Thanks everyone for responding. I have a strong lean toward all of the above.
Yep. It sounds like a good answer to me. We did talk about the fact that there was full and modified, which is what most people would deal with, but we did say that educational institutions have their own part of CAS to deal with as well. So all of the above. So early on, very early in the presentation, I said that, contractors had to have written CAS policies and procedures, that they would have a disclosure statement. Let's talk a little briefly about what that is. The general requirements for the submission of a disclosure statement. Any business unit, again, that's selected to receive a CAS-covered contract or subcontract of $50 million or more, including option amounts. That, again, is another key thing. When we talk about pricing actions in the government, and people want to know, do we include only the base? Do we include the options? Because now at the $50 million level, we'd get up there, but as well, sometimes even when we're talking about like that $2 million threshold for truthful cost or pricing data and stuff, somebody will say, well, the base year is under that, but if I add in the options, it's more. If it's all being proposed and awarded together, even though the government is going to exercise the options separately, it's all part of the contract, then all of that adds up to the total dollar value. Important to note there. Other general requirements, any company together with its segments that received a net CAS-covered awards. This again is really important. If you're part of a company that has multiple operating segments, hopefully you guys are not operating in silos, that you're communicating with each other and what's going on in these other segments, because kind of think like affiliation with stuff, right? You're under common control, and so there's going to be an expectation that you have, multiple, that you all are doing the same stuff. I will say we do work again with one of the very large government contractors out there, very, very large. They in fact have multiple CAS segments within their structure, and within each CAS segment, they have multiple operating divisions. So theirs is a very complex structure. Note that when it's required, a separate disclosure statement must be submitted for each segment, having more than the TCPD threshold of cost included in the price of any CAS-covered contract or subcontract. So again, if you think back to, go back to my statement a moment ago, that large company, and we see this, they will have intercompany transactions. They'll have multiple divisions, multiple CAS segments that are participating in a contract. If that's the case, then they have to have a separate disclosure statement for each of those segments that are over that TCPD or $2 million on any of those CAS-covered contracts. I promised you a decision tree. You may or may not be able to read it on here, download the presentation, zoom in on it. It is very helpful. Nice little decision tree here. Does the contract meet one of the CAS exemptions, yes or no? Over to the right, you've got some additional information to help you understand it. Again, I said that you would find that on DCAA's website. It's actually part of their, it's in their guidance section. It's in the audit chapter 8. If you're familiar with the DCAA website, go over to the guidance and the CAM chapter 8 is where you will find that. Some best practices. We've got some Q&A coming up here in a couple of minutes. Some best practices. We recommend CAS compliance to all contractors, even if they don't have a formal disclosure statement. Why? First and foremost, probably should put that before my number one on here. What I said earlier is that the auditors are going to beat you with the CAS stick. I hate to say it, but that's the reality. They're going to come in and beat you with the CAS stick, so why not be prepared? Number one on my slide here is that CAS generally aligns with GAAP and prudent accounting principles. Things that we talked about here today, look and sound, may not, again, if we dig into the details, particularly like with pension costs and ERISA, there may be some other requirements that are, in the details are different, but generally speaking, there's a lot of overlap. I did say, the auditors are going to use CAS as a guideline in an audit, even if you don't have a CAS-covered contract. Remember that I said that some CAS apply to all contracts or contractors, even those without CAS-covered contracts. And it's going to be true. The other thing that I should have said, I've got it here. If you go back and look at those slides on 4, 12, 13, 15, 16, 17, and 20, the real key is when those costs are significant. If you had a situation where those costs were not significant, don't have a guideline on what exactly significant is, we could probably argue about that. Obviously a very small percentage of costs involved, then there wouldn't be a requirement to comply. But obviously, if those costs were a significant cost, then you do need to comply. Number 4, contractors usually trip the modified CAS coverage before full CAS, so get a head start. The other thing kind of in line with that, we tell people, if you're getting started in government contracts and you're growing, it's very likely you're going to end up in a situation that you're going to at least end up with modified CAS. And it's a whole lot easier to begin incorporating some of these principles into your structure, into your policy, procedure, and your daily practices before they're required, right? You don't want to be in a situation where all of a sudden you win a contract that puts you in a situation of having to comply with modified CAS, and then you're calling us or somebody else scrambling to try to figure out what to do. Jenny, if you'll get the Q&A ready for us here. Just a reminder to everybody, you can go to our website and find additional information. I mentioned a couple of tools to you. Presentation information is out there. You can always email us at support@leftbrainpro.com. You can find us on social media. We do have some upcoming events, which you'll find on our website as well as on the Corsa website. And so with that, Jenny, if we can have some Q&A, please.
Yes, the first question is, how will the PPP loan impact cost accounting? Will the forgiveness have an impact on cost accounting as well?
Well, if you're looking at my face and I'm smiling and you hear the laughter, we really wish you had an answer to that. It's an excellent question. The general advice that we're having to give, I'm hearing this from other accountants and attorneys out there. Right now, the best advice we can give is simply to pay attention to what's happening. The requirements and the details around the PPP loan program are changing almost daily, or they're at least providing additional guidance. We're still expecting additional guidance from the SBA, the IRS, and DOD about forgiveness and how that's going to play out. We do have I've got an article, a blog on our website Again, if you go there, click on the answers blog. It's one of the first ones up there. It's about double dipping for government contractors. If you're a government contractor and you're participating in the PPP, please go read that blog.
Great. The next question. What happens if you choose not to apply CAS to government contracts and use some other accounting method instead?
If you are required to comply with CAS, then that's going to come out in your audit. And unfortunately, what's going to happen is it's going to be a finding. It's going to be something that affects your rates most likely, right? Because you've chosen a different treatment. You didn't do it the way CAS said to do it. It's going to be something that affects your rates. And so the government is going to require you to make that adjustment. You're not going to have a choice. And there's going to be a financial impact of that. If you're not required to cover with CAS, to comply with CAS, make sure you understand why and that you can truly support that during an audit.
Okay, our next question. Do I need to do anything special to document my compliance?
You're going to have a written policy and procedure for all of this. So, our recommendation is obviously, work with somebody like us, could be another accounting firm. I always like to insert here, this isn't just necessarily about us selling services. It's really about sharing information. But I honestly believe you need to have an attorney and an accountant who practice government contracts. That does not mean giving up any existing attorney or accountant, but you need somebody who understands the intricacies and the quirks of government contracts. Get somebody who's experienced with CAS that can help you review your policies and procedures, make sure they're well documented, make sure they're aligned with the current regulations.
Okay, our next question is, which CAS items are required of all contractors?
Again, let me back up a couple of slides. I think I can get to some of those. We talked about, how quickly can I get there? I apologize, I'm gonna have to go back. 412, 413, 15, 16, 17, and 20, I believe. Oh, here it is, I passed it, sorry. 412, 13, 15, 16, 17, and 20. I had that correct. Again, when those costs are significant, you could be in a situation where it truly is an insignificant cost. And so I'll use the deferred compensation as one. Maybe you do have a deferred compensation plan, but in the grander scheme of things, it's, a fraction of a percent of all compensation or whatever, then you probably could get by, assuming you didn't have any other requirements for CAS coverage, you probably could get by without complying with that.
Okay, and if we have time for one more, this is more of a request. Is there a way to get a sample of CAS written procedures for small contractors?
So we actually have a policy and procedure template that we sell. If you are interested in that, contact us at support@leftbrainpro.com. Be happy to work with you on that.
Great, thank you. That wraps up the question.
Wonderful. Thanks, Jenny, so much for facilitating the Q&A. It's always great to have a chance to just take those questions and answer them at the end. Well, Robert, we're looking forward to having you back on June 9th. That'll be great, and the audience can visit incorsa.com. We'll have that registration page up quite shortly, I believe, and we're really excited to announce. So here in May, today was the 5th webinar that Robert has presented, actually 6th, including the payroll protection program add-on. This is the 5th webinar of the 5 of the 12-part series that Robert is presenting with Incorsa this year. And we're really excited to let you know that for those of you who are joining us partway through, we've been working together to turn the courses that have happened so far this year into self-study courses. So we're going to have those available in the later this week and the next week or so. We'll have those courses live on Incorsa's website. So if you're looking to catch up, then you'll be able to take those courses as self-study on demand to earn CPE credit. And then also the recordings are always available as well. So if you have any questions, feel free to just email me Liz@Encorsa.com if you're interested in how you can sign up through that on Encorsa's website. And then also you can always email Robert and his team as well. So we're really excited to be able to make that available for you, to have Robert back on June 9th. And then there will be a short survey following the conclusion of the program. So feel free to take that survey. We love reading your feedback. And then we'll have the recording of the program as well as the handouts available for you to access via your Encorsa dashboard. So Robert, thanks so much for being with us today. Thanks, Jenny, for being on the line as well. And we'll look forward to having you back with us next month.
Great, thank you.
Thank you.